Good morning. There seems to be a whiff of earth-shattering change in the air this morning as Yellen prepares to hit out at corporate America. China starts sanctioning foreign companies, and Mark Zuckerberg suggests censorship. Let's get into it. Sorry about that. The SEC yesterday made news by launching Trump's bill to delist Chinese companies from U.S. stock markets. But the regulator is also beginning to ask harsh questions about risk management amongst SPACs, underwriters. That's according to a Reuters exclusive. SPACs are shell companies that buy a private firm with aims of taking it public. They've been on the rise lately with cheap money from low interest rates and government stimulus plans. U.S. equities closed down yesterday after Treasurer Janet Yellen suggested a 28% corporate tax rate hike to help fund President Biden's upcoming $3 trillion infrastructure bill. Good for engineering and banks, but hardest hit so far, the NASDAQ and Russell down 2% apiece as economies begin to look at COVID's day after. Yellen told Congress yesterday she was limiting her proposal to 28% to remain internationally competitive. On the other hand, she's prepared to see banks paying dividends and buying back stocks as the economy begins to recover. And so we come back to the NASDAQ. Futures this morning are optimistic to the tune of about 0.1%. On the daily chart, we're looking at a triangle closing in on 12,940 with a negative but slightly oversold RSI. On the hourly, we're clearly approaching support and oversold. Break below and we could easily hit early March's 12,300. Above, look for R1 at 13,243. Mortgage applications this past week dropped by another 2.5%, durable goods by 1%, and March's manufacturing PMI missed expectations by adding a point to 59. Ahead, the 4 and 8 week and later 7-year bond auctions, but before that at noon, we'll be hearing about this past week's jobless claims, Q4 GDP, and consumer spending. European indices held on to slight gains yesterday as PMIs across the board came in surprisingly well for economies returning to pandemic shutdowns. German manufacturing in March soared by a full 6 points, while service and composite markers in the UK were up by 7. Still ahead today, Switzerland's central bank will be publishing interest rates as the franc keeps falling. Chinese benchmarks are down this morning, especially in Hong Kong, as investors begin doubting the nation's tech sector thanks to U.S. Securities and Exchange Commission's delisting rollouts. Accordingly, U.S. exchanges will no longer list Chinese firms owned or controlled by foreign governments or Communist Party officials. Reuters reports that Nike is seeing a lot of social media consternation, while the Communist Party is leading boycotts of H&M and other Western brands that have been lashing out against Muslim human rights abuses in Xinjiang. Meanwhile, after HSBC this past week halted loans to coal mining, Australia, a prime culprit in the Earth's debasement, is upping its dependence on Chinese oil refinery products, pushing along what Australian officials themselves have been calling China's coercive trade warfare. Meanwhile, the local S&P is up 0.5% and the Nikkei 1.14%, as central banker Kuroda says he will continue buying ETFs. A half hour before midnight tonight, Japan will publish consumer inflation figures for March, so look out for the yen. Oil was again slapped down by the EIA, reporting another 1.9 million barrel increase in inventories. A sand-struck ship blocking the Suez Canal is delaying oil cargoes as well, but not enough to hit prices. What Bloomberg is calling the Suez Snarl is holding up $6 billion of traffic per day. Not that that's what's going to draw oil back up, but we are looking at the ending of a cup and handle pattern, and we are a candle short of a 3 white man formation. So again, room for optimism. Facebook czar Mark Zuckerberg yesterday told Congress that social media companies should be able to show that they have systems in place to identify and remove unlawful content. Amazon is under Canadian investigation for occupational health and safety infringements. And this morning finds GameStop down after a stocks upgrade. Yeah, we can see 33%, while Viacom plummeted 20% as the company announced a $3 billion stock sale to finance its new Paramount Plus streaming service. Baidu and Alibaba also fell dramatically on the new SEC regulations. Tencent Music yesterday announced a 14% year-on-year increase in revenues, while Xiaomi's revenues added nearly 25%. Also, you can now buy a Tesla using Bitcoin since the company has no showrooms and only markets over the net. And finally, Gazprom, one of the few companies in the green this morning, reports earnings later today. And so, coming full circles, billionaires interviewed for a Reuters article this morning indicate that if taxes on the wealthy succumb to Yellen's tax hike, they'll be shifting even more of their money offshore and amongst their families. And so, we should all prepare for thriving trust funds as the world's richest, who made a mint on the COVID pandemic by shorting everyone and everything, prepare for this brave new world. Goodbye, everybody.